Our next guest says the Fed's strategy isn't just a policy error, but a Ponzi scheme.
A new article explains the new buzzword Web3 and breaks down what the upcoming online era could look like.
Look, I think that a recession is almost inevitable.
Put simply, DeFi gives financial freedom back to the people.
Hey guys, this is the Alpha Drop podcast, which is presented by New Order and focuses on DeFi and macro analysis. I'm Contento. I work on the community/marketing side at New Order, and we're joined by, as always, the two Chads, BlkSwan and Mitch.
Hi, this is BlkSwan. I'm a fund manager outside of being a contributor at New Order and Frogs Anonymous, specialize in derivatives and multi-strategy, crypto, and traditional theme investments. Here at New Order, I focus on treasury management and macro themes.
Hey guys, my name is Mitch. I am focused on researching here at New Order, so pretty much coming up with new ideas for us to incubate in the DeFi ecosystem.
The Alpha Drop podcast is brought to you by New Order. New Order is a community-led incubator DAO that builds startups at the frontier of decentralized finance. We incubate and launch projects while accelerating early-stage DeFi protocols. New Order acts as a co-founder and works directly with teams by leveraging and deploying our network of developers, researchers, and business development experts. Our vision is to create the next generation of DeFi protocols by building alongside future leaders in the space and contributing intensively to innovative projects. If you're a founder looking to work on a new project or a builder looking to get involved in the DAO, head over to neworder.network to get started.
Okay, you know what? I think it's probably best to just start off with macro stuff. Is the Fed going to pause? Are rates going to go higher? How did the midterms go? All that type of good stuff.
So yeah, midterms were a bunch of noise. To kind of interpret what was going on was the market wanted the Republicans to win, because generally when you have this Biden regime has pretty much failed at everything, trying to not just pass good policy, but pass policy that would cut back inflation. So and when you look at what the Biden platform ran on, they were pushing for midterms this abortion rights stuff. They were pushing, whether democracy was at risk. That was the big topic they were pushing. And then blanking on the last big platform. But when you compare it to the Republicans were arguing on this point of, look, inflation's a problem, crime is a problem, and of course, oil and gas prices are a problem right now. And a survey was done by Bloomberg where they ranked the things that Americans today felt were the most important things in regards to politics in the world. And everything that the Democrats were running on were at the bottom 25 of most important things, right? The top three were inflation, gas prices, and of course, crime. So the Republicans had this big, W in their hands, essentially, and that's how much of Wall Street viewed it. And so to have that change in regime, the basic view is that the Republicans would have turned on the gas spigots, promoted, energy companies to start producing as much as they possibly could. Which is ironic to that is that would actually be bad for energy. They preferred the Democrats to win because they get to squeeze more money out of people. The Republicans would have been a little bit more fiscally conservative, so that would have put a damper on spending. This Inflation Reduction Act, interestingly enough, I think Contento, you sent me that chart on Twitter, but it brought up a good point, because this last quarter, every rate hike and form of quantitative tightening that the Fed has tried to pursue has been completely offset by the Inflation Reduction Act, right? So this comes to questions like, all right, why was the Inflation Reduction Act passed in the first place? The Dems were trying to stimulate and kind of win over their business peers to get their votes, right? But the problem is inflation is going to stay because of that. We've literally offset every single move the Fed did during this past quarter. So that's why we're seeing persistent inflation. And so this question comes, our CPI report came out yesterday, where we showed a little bit softer core numbers. The expected was 40 bips, comes out at 30 bips, right? A little soft. and you see the market absolutely rip face, right? We saw freaking the S&P 500 shoot up 1,200 points. It's only done that 32 times in the past 20 years. Like, it's a very rare event. So the market's saying everything's bottomed, we're all good, now we're all Gucci. But what I want to point out to you guys, if you look on our little shared alpha drop document, what I included in there has been the monthly changes in October for what's measured in CPI. And so what I want to point out is, look, fuel and oil costs shot up 19%. Okay. And what they were pointing at for this CPI report was, they were saying, look, the prices of used cars are coming down. Well, yeah, they're coming down because Carvana's going out of business. All these, interest rates on a lot of these vehicles is becoming ridiculous. People can't afford them anymore. And they're pointing at things that really don't matter too much. At the same time, when yesterday the market was ripping up, if you saw the price of natural gas, it ripped up just as much, right? It was a full-on risk-on event. So coming into the December report, if the market keeps on ripping face, indicating to the Fed that the economic conditions are loosening, they're going to continue hiking. And if you look back at the last meeting, and by the way, anyone who follows Bloomberg, CNBC, any of those guys, don't even pay attention to the headlines. So I was monitoring that all day. That day, before the even notes came out, they were saying the Fed is hinting to, interest rate cuts. The hour that the notes came out, they literally said Fed hints at interest rate cuts in the notes. And when I read those things, they didn't even say anything about that. There was no hint. There was nothing. And he comes out and says during the speech, yeah, there is no reason for us to cut rates. In fact, rates are going to go higher than expected, right? So the media and pretty much everyone on Wall Street is like a cocaine addict, waiting for that next hit of liquidity, waiting for something. And you can see how they're in this bargaining stage. Now they're saying, oh, this is the bottom, maybe the soft landing's in. There's nothing yet that has reversed the situation. And we're about to head into one of a cooler winter with very low supplies of natural gas and oil. So you're just going to have this upward pressure on a lot of the main ingredients to what we need to help run the country effectively. And we're going into a cooler winter. I think, if anything, you're probably going to see the market rally. And I will tell you, as a portfolio manager, why you see it rally and why we have the Santa Claus rally in quarter four is because we need to get our performance bonuses. So we'll make it rally no matter what. You can't promise the missus a gift you can't pay for without that performance bonus. So I think you'll probably see the market maybe, kind of do an upward trend towards the end of Q4. But come Q1, Apple's going to report earnings end of January, and you're going to see, really what damage is being done to the markets.
I feel like Apple's kind of been hinting at their demand's kind of slowing down.
Yeah, they're padding for earnings. They're you set up a bunch of bad expectations. You try to flip results when earnings come.
What do you make of the outcome of this for the next year or so? I mean, we're already seeing significant job layoffs. Meta just laid off like 11,000 employees. I think I just saw today Coinbase laid off like 1%. I assume that a lot of these corporations are going to continue to lay off. So how do you see that impacting the market? And, these companies, yeah, like you said, maybe like padding the earnings a bit just so their stock price doesn't decline, but aren't they kind of just holding off the inevitable? And they will have to start to lay off employees, and that will further deepen the recession.
Yeah, and it will. And that's exactly what the Fed's trying to do, is you can't kill demand without putting people out of work. Mm-hmm. So a recession literally means, right, demand's down because unemployment is up. So, I've a lot of my buddies who are in tech, though Amazon, for example, is cutting or plans to cut, they're going to run a skeleton crew on a lot of their platforms like AWS, Amazon Fresh, all that stuff, because they're bleeding. AWS actually pays for Amazon Fresh and like 30 other different components in Amazon. And so now they got to start cutting things in order to be a little more profitable. But you're right, it's going to actually kickstart the recession as people are out of work. And what people don't realize is we aren't near the bottom yet. Unemployment starts rising during the contraction phase, right? We only hit the bottom when unemployment's at all-time highs, and that's a lagging indicator. So I do think you're going to see kind of like this mass migration from tech. So the areas of the world that are more service focused, and you're going to see them a lot of jobs actually opening up in more kind of like the producer manufacturing type of jobs. And the reason why that is because we still have demand, right? We still have demand for goods, foods, and services. We're starting to get low on supplies on certain things. You're going to see that remain stable, relatively speaking. And the jobs that are being cut right now, they're not McDonald's jobs. They're the white collar, I sit behind the desk in the office type of jobs, right? And those are more the higher earners. So one thing I actually do expect is I expect that those minimum wage type jobs, those food service, manufacturing type jobs, you're going to see some wage inflation there. And then you're going to see a lot of these more white collar people get laid off as time goes. And that'll definitely start kicking into gear a more familiar recession that we're used to.
Right. Yeah, I think that makes sense. It just makes total sense that these more like high growth sectors, particularly in, the tech sector, and these companies trying to come up with innovative solutions for, whatever it may be, right? They're going to get hardest hit because they haven't found product market fit for a lot of their products yet. So
Exactly.
they can't sustain the revenues enough to be able to pay their employees. So yeah, it would make sense that these employees next step would just be getting sort of stable job in the service sector.
Yep. Yeah.
Interesting.
Oh, have you seen that what's one? I think it's like Dude Bro on TikTok, but he like came out with a video where he's like, Tech Bros 2021, and they're like bitching and complaining that Google's only paying them 550, or Amazon's going to pay them 600 a year. And then it's like Tech Bros today, and they're like cold calling people saying, "Hey, would you like a new website design for like $30 a month?" This cracks me up, dude.
Yeah, I can't say I'm on TikTok, so I don't really know what you're referring to, but
I'll send it to you. It's a great TikTok
Dude,
actually, Dude Bro, and I'll find it and send it to you. TikTok is honestly a great resource for sentiment analysis of the market. Like you get a really good sense on what people are feeling pretty quickly.
Yeah, that makes sense. It's a good check on the behavior of society at large, I guess.
Exactly.
I was gonna
Bring
say,
back fintech.
do we think that crypto bottoms around the same time as equities, or what would that look like? Is it going to be like another halvening type of, where we bottom around the halvening, or is it going to be where we're going to be super tied to equities?
The crypto market, it's interesting because we're and this kind of segments nicely into what's going on. What happened in this last couple of weeks with FTX is crypto market's kind of going through its Lehman moment a little bit, because you just had one of the largest exchanges just over, what was that, 3-4 days, just say, yep, we don't got no money anymore, right? So, and that's going to suppress crypto prices further, right? So I think that like crypto's bottom will definitely line up with the equity markets, and crypto might lead equity market. It's actually, I think it might, and it's my belief that crypto will bottom before equity. But events like we're having right now, where you have such a big player go under, you're going to see crypto markets swing violently downwards more, and be more suppressed than they should. It's going to present some nice buying opportunities, say at the very least. But yeah, this FTX thing, I mean, I think everyone can agree is kind of out of the blue.
Yeah, absolutely. I mean, this is only the start of it, in my opinion. I mean, in the bankruptcy report, they stated like 100. It included like 130 affiliated companies.
Oh, that's right. Someone posted it on Twitter too, like their business structure.
I saw that.
Yeah, which is just insane. And like BlkSwan is included in that. Supposedly they had like 100% of their holdings in FTX, and FTX was kind of like pressuring them in order to use their like custody solution.
No, really?
Yeah, I mean, this is all, I'm just kind of stating what I've been seeing. So not exactly sure if it's 100% true, but given that, I wonder, you got to wonder like how many others are involved in this based off of FTX's pressures, because FTX, the higher ups knew that's something that they were in debt, deep in the water. They needed to, kind of convince these other companies to trust them, right? So they could have money to cover up their debt.
Yep.
It's just crazy, man.
So I got a conspiracy theory. So
is it that SBF is a Fed?
Oh no, it's about Tom Brady.
Let's hear it.
So Tom Brady and Giselle, they were big investors in FTX, right?
Mm-hmm.
But weirdly, Tom Brady, who quote unquote retired, comes back all of a sudden. Okay. He comes back, signs a new contract. Contract's $350 million, right? For 10 years. He's going to be set. But he came out of retirement for that. And then on top of that, him and Giselle got a divorce. Now, look, generally, if you get a divorce with someone, it's because you found and especially how kind of on the dime that was and whatnot. I feel like they were informed that FTX was about to go under. And I mean, they put $650 million into FTX itself. That's a lot of fucking money.
Yeah, it was like their life savings.
Yeah, their entire life savings. Now, if I'm Giselle and I find out my hubby, he may be rich and a famous football player, but if he puts my life savings, our life savings, into a company and then informs me that it's going to go bankrupt in a few months, I want out, right? I think that's why they got the divorce. I think that's why they split up. That's why he got a new contract to go work in the NFL again, because he knew that things were about to fucking hit the fucking fan. And
that's actually really good. It's a really good point. That's a really good point. Wow, that's crazy. There's so much speculation around the FTX thing, though. So much. Like it's bad. Like I feel bad for everyone involved, but the stuff that's coming out is so crazy. Yeah. So crazy. Like some stuff about there being a cult, and that it was like the 10 people who lived with SBF or the 9 people who lived with him were like a part of some sort of cult, and is like, I don't know, it's just so crazy. And like, I don't know, there's just too much. There's too much like conspiracy theories, but that one actually sounds like probable.
Yeah.
It's Illuminati ties is what it is.
Illuminati ties. There you go. Which, all right, I want to point something out though. Like this FTX situation. Look what they did. They what did they do? They held in the treasury their own token, and they said the value is the FTT token, right? And yeah, and they said the value of FTX is FTT, and FTT's value is derived from FTX. This is the same freaking loop problem that Terra fucking has, and a lot of crypto places have, is you're putting all your cards into your own token instead of diversifying.
Right. Yeah. I mean, I think this brings up a good point, is that, you know, there's no reason to really release a token for anything unless it has some utility, right? So FTX released this FTT token, and basically all of the utility of it was just for them to sort of try to help bail out Alameda so they could deposit the FTT token as collateral, borrow a shit ton of funds, and then try to gain back you know, whatever they lost during their trading activities, right? But the FTT token didn't itself has like absolutely no utility, right? And they were just like kind of pitching this token as, yes, have like, if you buy this token, you hold it, you have stake in FTX. It's crazy. And you know, there's a report today that said, you know, Binance as you know, they're pushing this charge to have like Merkle tree proof of reserves, and they came out with this transparency report that indicated like 50% of their holdings are in their own native tokens, right? Like that's also kind of a cause for concern. I think CZ put something out that like disproved some of that, but still nonetheless, right? Like you have to have a diversified treasury. You can't just like release a token and then just kind of base it off of just like market speculation, because then shit like this happens.
Exactly. You know, speaking of you know, just kind of transitioning to the ripple effects, because it just hit me. You said that, you know, they were using the FTT token to kind of bail out Alameda. Now, Alameda, I mean, they had ties with Maple on their institutional lending platform. And I just went to Maple today. They now have a banner displaying, you cannot, Alameda is no longer on our platform. Like,
oh, Maple took them off the platform months ago, from what I heard.
Did?
Yeah, because Maple was like weirded out when they saw their books, right? And they were like getting a bit scared, and like Alameda wasn't giving them a lot of information about what was exactly in their books, right? So that's, you know, good on Maple, I guess. They didn't really get tied up in that situation at all.
That's good. That is good. Jesus. I couldn't even imagine. Oh man. See, I think this is, if places are going to do, like if there's going to be a fully kind of blockchain fund or even a hedge fund, you got to have everything has to be on like the same blockchain where you can see where, you know, where they have all their assets tied up and whatnot, because a lot of this could have been avoided.
Right. You just need like full transparency, right? Like none of this wouldn't have happened if these companies were like fully transparent. And I'm not saying this should be particular to decentralized crypto institutions. Like I think this should be kind of a warning signal for like any financial institution that has a large amount of holdings. And if they're not fully transparent, then there's always the risk that they're hiding something under their books, right? And then, you know, and then that just hurts like retail investors at the end of the day more so than anyone else.
Exactly. I forget who said it, but I'm blanking out on the guy who said this, but he notes that like, look, the market is good at evaluating risks, but only risks it knows about. And so like that's why being transparent is so important, because if you're at least transparent, everyone else, like even though you might get a horrible valuation or whatever, right? You'll still get a valuation at the end of the day. Okay. There's going to be someone who would be willing to invest into that. But by being opaque, yeah, you might pump your valuation up in the short term, and you know, then it's a game of who gets out first. But you know, you cause more damage than you did any good. Yeah. But yeah,
right.
It's just,
well, yeah, exactly.
baby.
Like yeah, like, and just take the flip side case. Say if FTX has been fully transparent this entire time, like since inception of FTX itself, SBF wouldn't have been greedy with the money and loaning that out to Alameda in the first place because he knows, like, everyone can see exactly what he's doing. So first, that wouldn't have happened. Say in the case where he did, then people wouldn't have continued depositing money in FTX, and we wouldn't have had this massive implosion event where it affected 130 other companies, millions of users, etc. So, and SBF probably wouldn't be sitting in the situation where he's probably going to prison. So just like the consequences of those actions and the consequences of not being fully transparent are way larger than being transparent initially,
Yeah.
I was gonna say, like this is kind of a question that's like sort of related, but I want to loop back to the knock-on effects. This can be attributed to the Luna UST event. No, this is technically. Sorry.
I think it definitely. The Luna event definitely has a pull on this because there had to be a series of instances that Alameda blew up on, and that did Alameda like remove a shit ton of liquidity back with the whole MIM event? You guys remember that? It was like in 2021 they removed $500 million worth of liquidity from the Curve MIM pool, where MIM would do the automated loop. The Abracadabra would do the loop system into UST and MIM, and you're like levering up. They like removed a shit ton of liquidity at once and crashed the price of MIM momentarily.
Yeah, I remember that briefly. I guess that was pretty close. That was pretty close to the UST event. I'm pretty sure.
Yeah, it was like maybe like a month or a couple months before. Yeah.
But like my point is that, so okay, when did the UST event happen exactly? Like I don't remember.
That was in May.
It's in May, right? Okay, so that's what, 6 months?
Yeah, it's been, let's see. Yeah, that was May 5th, 6th. Yeah, that was about 6 months ago.
Damn, almost like to the day. It's kind of crazy. Like, so like my point is that we possibly won't see the full effects of this whole thing until 6 months down the line.
Yeah, I mean, the ripple effects, and like the contagion isn't gonna end for like months, maybe even like a year or years, right? Like I personally think like sit back, like the crypto industry back a couple of years, before like fully recovering. I mean,
I've seen that I've seen a couple people say that, and I don't know if I fully agree. I feel like that, I don't think it sets us back, but I think it will introduce a lot of regulation. Now, whether you say that's a setback or not.
It is, yeah. Yeah, I mean, my huge concern with this is that everything's going to fall under this crypto umbrella, and regulators aren't going to see the difference between centralized institutions and decentralized institutions, and the fact that these decentralized institutions are like protocols that are run on the blockchain, fully transparent. They're going to put that in the same bucket as everyone, all these centralized companies, right? So all the regulation is going to apply to all of these entities. And then we're going to just lose decentralization at the end of the day, right? We're going to lose all of the benefits of it. And given that instance, right, like if it's not just particular to the US regulation, but it's also, these other companies, or not companies, these other countries take a similar stance, right? Like, where do you go if you're building a decentralized protocol? That's like my huge concern, right?
Well, I mean, let's. I mean, a good argument can be made though against that, and that, I mean, if you look at places like Aave, and whatnot. I mean, they've done a really, really good job at isolating themselves from a lot of these dangers. And I think there will be, I agree with you. I think there's going to be regulation introduced that's overprotective, right? But for the most part, I mean, with securities law, like the SEC doesn't give a shit about a lot of stuff. Okay, I mean, if you even look at securities law, you don't really have to file anything until you hit like the $25 million threshold. Okay, so like when it comes to producing stuff or launching a token, I think what's most likely going to happen is a lot of people are going to have to start following the rules that the traditional industry took. So like instead of launching a token where everyone and their mother can just buy it, it's going to be, oh, you got to do some KYC. Now, know your client. So like, what's your minimum net worth? What's your experience with investing? All that other jazz. Because today, I mean, you can launch a fund to go, or you can launch a company and issue stock and do all that other jazz, and you can get friends and family money, like up to 35 of them, that maybe they're not accredited investors, but they can invest in you. You'd be totally fine. And the rest of them, you have to have a personal relationship with them and they have to be accredited and all that other stuff. But there's a lot of flexibility when it comes to raising money and trying to do a lot of this stuff. I don't think the SEC is going to put regulation that says no investment in crypto and all that other jazz. I think it's more so going to be around who's able to access it, why are they able to access it, and that's about as far as that goes. But I also, don't get me started on KYC stuff. I think that should be changed. The US is weird with it.
Yeah, 100%. Just more so meaning like, I think there could potentially be regulation that the US is considering for these like DeFi protocols, for example, right? Which is would be absolutely terrible. And another to the point of like why I feel like this is setting us back farther than what people think is centralized institutions were the on-ramp for most of these, for everyone like getting into this DeFi world and exploring different protocols on the blockchain, right? If a bunch of these companies are going down right now and a bunch of these companies have to like hold off to wait for regulation to actually like happen before they can onboard like millions of other users, right? Like we're just stalling innovative like potential for what's occurring on the blockchain itself. So one, there could be a case where there needs to be better on ramps. Like maybe just going through an exchange isn't the right solution. Maybe there's something else that can on ramp users that complies with regulation, right? But isn't custodying users' assets, where like events like this can happen.
I see what you mean. I see what you make it. You make a really good point on that. Because a lot of in the traditional industry, when you want to invest into anything, so like let's say I come to you and I say, look, going to launch this hedge fund, whatever, right? I have to hold your funds at what's known as a qualified custodian. So a third party has the funds, and I have to call them up when to deploy, right? That's about it. There's no me holding it personally and then being able to do with whatever I want. And with that qualified custodian, you have to tell them, like you're presenting a formal document that says these are all the places where the money will go. Here's how you can get access to it. Here's the people to get in contact for if you need to get in contact with them. Like it's a formalized process, so that way nothing's misplaced. But I think I agree with that. Like there should be maybe another intermediary to step in there as that layer of protection for people.
So now
that this stuff.
Sorry, I was just gonna say.
Okay.
Now that they've claimed bankruptcy, is it possible for them to still get bailed out, or is that done? That's off the table.
Well, So
I don't know why anyone would want to bail them out.
Like the
Well,
U.S.
yeah,
government or anyone like that type of bailout.
well, so I mean, possibly the in the event of bankruptcy, what's going to happen is they're going to go through. Did they file Chapter 11 or what? Would they file?
Chapter
Chapter
11, yeah.
11.
Oh God. Okay. So essentially, what they're going to do is they're going to reorganize FTX and try to figure out how to best pay off the debt. So, like,
Just sell all the assets.
yeah, they'll probably sell off all the assets. Which now that comes into question. You have all those depositors. Were the depositors' assets claimed as the individuals, or were they claimed as FTXs?
Right.
Because now you got that problem, right? I forget what was the exchange that was it Celsius who claimed all of the assets as their own or something like that. I forget. Maybe it was
I believe it was Celsius, but I think FTX put in something similar into their terms of service.
Yeah, so if that's the case, then that means everyone who had assets left on FTX lost them forever, right? They're going to be used to pay off the creditors, and FTX might continue, but what will be interesting is, I mean, I think what Scaramucci was trying to buy back Skybridge, which he sold 30% to FTX. So you're gonna see a lot of vultures coming in and swooping up pieces of their capital structure now. So yeah, it's gonna get ugly. You're gonna see this carcass picked apart pretty quick.
So all investors, all VCs are SOL.
Yeah.
Yeah, like
the debt unless they have a debt investment, but if it's equity, they're done.
Oof.
yeah, Paradigm and Multicoin were the two biggest investors that are hurting the most. Yeah, I mean, and that's not even considering all of the different companies and protocols that FTX Ventures invested in, like basically Solana, Serum,
Oh yeah.
Stargate, Aptos, like all of these are gonna.
I'm pretty sure
might be
Stargate
part of
might
this.
have.
This
I'm pretty sure Stargate might have bought them out, but bought out their equity. I'm like,
Hopefully
yeah.
these guys don't need strategic funding by FTX anytime soon.
And they even hired, like, did you guys hear about who they hired? I don't know. I don't remember. I've been trying to find the name, like the whole entire time we've been on.
Who hired who? Like who?
FTX hired. I'm trying to find who's replacing Sam as the CEO.
I mean, FTX is done. That's why it was like when news came out today.
John Ray the Third. There we go. Sorry.
Yeah, and what was he involved in? What was the entity? It was like same kind of situation.
Wait, really? He was in a.
Yeah. You guys keep discussing. I'll try to figure out who I'm talking about.
I was just gonna say I thought it was funny when news came out today about Sam stepping down as CEO, and it's like that was big news. It's like who really cares? Like it's over.
Right. Okay, so John Ray the Third was caught for insider trading.
That I didn't know. That I did not know.
Yeah.
Yeah, along the same lines, I'm really curious to see what comes out of this in terms of like the political ties that, SBF's parents had deep political ties, like the high up lawyers. Caroline Elias, whatever her last name is, they had like some sort of relationship in the past, and her dad is like close to Gary Gensler.
Oh man. Hey, this might be a good thing. We might like literally see. Maybe this is how Gary Gensler gets kicked out. He's like, you were aware of all this happening and didn't do anything.
Right. Yeah. Honestly.
Yeah. So this is why we need Y2K finance on like every single company available.
Yeah, I actually think that as well.
I think that would be I think that
But
would be
then
pretty cool. You just do like credit default swaps on companies and whatnot.
how do you determine like the strikes on every asset? Like
You just let the
eventually,
market
yeah.
price it. Yeah,
Yeah,
that's all you do.
exactly.
Let the market price it. Market will figure it out, and then there you go. I mean, right now, she's like you can charge a pretty penny.
Yeah. I mean, like protocols like Y2K honestly just make the market more efficient because if somebody has a stance or point of view, then Y2K is giving users the opportunity to put the money where your mouth is, essentially. And there definitely should be like more protocols that take a similar model.
Is Y2K, speaking of which, are they like are they trying to partner with any like third party like reinsurance companies or anything? Or they just kind of keeping everything DeFi?
Yeah, keeping it DeFi. I can't speak on their behalf, so I won't
That would
comment.
be that see that like if Y2K, if they wanted to do things right, they would partner with a bunch of reinsurance companies because those reinsurance companies will provide more liquidity for them to do deals. And if you want to really drive business, and this is where I see DeFi kind of going down the road, is DeFi will be like the aggregator for all the other companies. Like you can come to the one spot, go to Y2K. You want to make a bet against FTX, there you go. The reinsurance companies come in there and they give it their price or whatever. Okay, if FTX blows up, well, now you have the liquidity providers of the reinsurance companies and come in there and do their thing. But yeah,
That's actually interesting.
yeah, that's what I think the biggest problem with DeFi is today is that they want to be divorced from the real world, but the real world is where you can really that's how you integrate into everything. Proof of concept on Y2K, like they made it, it's built out, but for them to go out and then build those partnerships with insurance and reinsurance companies and get that part set up, now you're the only platform on the blockchain. Proof of concept is done. You got the partnerships. You're essentially the go-to place for even JP Morgan, all these guys. Because if you look at Jamie Dimon, like why he's quote unquote excited for this recession is because they're hedging all their bets. So if the economy comes crashing down, the people who are taking the other side of their trade has to pay up, right? And to bring that to a global scale where everyone has access to it, that's how you really, really expand DeFiverse.
Would have made a lot of money off that, I guess. There was a couple of people who were calling for this, so I mean, kudos to them. No one saw this coming.
Yeah.
Good boy.
Y2K, if you're listening, go partner up with AIG.
Okay, so I think now maybe we can turn to some maybe more positive things. Tough to kind of see that now, but there's a lot going on, a lot of people building. What are we excited about? What do you guys like in the market?
Interesting. Yeah, I mean, something that I've personally been super interested about and diving into with a lot of research is how the order flow market in DeFi is going to shape up. I mean, DFlow announced they're releasing an app chain on Cosmos, and they're auctioning off future order flow to these market makers, or really anybody who wants access to this. And I think a mechanism like that is super important, and there's going to be more iterations on that, because the concern is with say Flashbots is private RPC, there's a risk of centralization for one or a particular number of block builders who essentially just control all the market and extract all of the value. So there has to be solutions to kind of democratize and decentralized for that matter, these block builders. And I think DFlow is making good steps. They released information about their app chain, but I'm curious to see like more research about it, as well as, you know, more solutions that take a similar approach. That's one thing that is quite interesting. Another thing is interest rate market. I mean, we'll see how that plays out with all the liquidity kind of just being leaving the space over these past couple of days. But I think there's merit to when fixed interest rates have found product market fit within DeFi. That's going to open up a lot of like innovation, a lot of different Legos that can be built on top of those protocols. A couple in particular, like Volts, for example. Although I believe they're on Solana, so they might be screwed. But protocols like that, right, that are allowing people to actually have guaranteed interest rates instead of like relying on the variable nature of DeFi in itself. I think there's going to be a lot of like interesting and more like innovative protocols that'll be built on top of that infrastructure.
I didn't realize Volts was on Solana. Hey, that's a well. Let's hope Solana makes it out alive, right? So
yeah, I mean, I think Solana will, to be honest. Like, and if they do, I'd be long on Solana personally. That's not financial advice, but I mean, if they do, that means Jump is still alive, right? Jump is hyping up the Fire Dancer validator, and Solana itself, I feel like, just has like a tight knit community.
Well, we'll see. I think over this next year, we're really going to see what sticks and what doesn't. It'll be a very, very, very interesting time period. I don't know. It's I've been hearing a lot of chatter about Cosmos and mainly about Cosmos, but yeah, I don't know, man. I don't know. I think as like a relative value trade, maybe Solana if the markets were a little more mature, but depending on how all this goes, it'll be interesting.
Yeah, I mean, to take an optimistic point of view, like this sort of contagion events opens up a lot of opportunities for builders to build solutions to these problems, right?
Yeah, that's actually a really good point. Yeah.
I'm an EVM maxi though. You're an Ethereum maxi?
Yeah. Well, maybe not Ethereum. Maybe like just EVM.
EVM in general.
Yeah.
Well, is Solana's throughput like relative to say you got Arbitrum, right? It's like, doesn't Arbitrum put EVM on the same level of Solana anyways?
Not in terms of time to finality.
Oh no, it doesn't.
Solana's the fastest chain. Say Network, for example, Cosmos App Chain, on their testnet, they claim they have faster speeds than Solana even itself, but that's just in testing phase. So we'll see if that comes to fruition. Avalanche has fast time to finality. I'm actually kind of surprised that nobody talks about Avalanche, it seems like.
Their marketing budget right now.
Yeah. Polygon has the best BD right now.
Yeah, but have you ever tried using Polygon?
Yeah.
Trash. It's clunky, bro.
It's not that bad.
Listen.
If
it's good for Jamie Dimon, it's not half bad. But
does it go down as much as Solana though?
No, I don't think so.
Yeah, that's a good point. Solana's gonna have
I guess like part of me does respect Solana, one, just because they have like the best BD team in all of crypto, but also two, they're just releasing all of these different types of chains and L2s and side chains and whatnot, and they're kind of taking like an all-encompassing approach where they don't know exactly what's going to be the solution for the future, but they're kind of playing, they're not keeping anything off the table, right? So then once a certain type of chain, whether that be ZK or optimistic, rollups or whatnot. Whatever kind of wins out the market, they're in position to just like go all in on that solution because they have like all of the architecture built out for the different rollups and whatnot.
Yeah,
Yeah.
that's a good point. I mean, I don't know how much value is going to be reflected to Matic, but we shall see. Probably would get a bag though, like not financial advice, but like eventually.
I love
Right
that.
now, all
This
the
isn't
support
financial advice, but
I have to make sure I say that right. I mean, yeah. I don't know. I don't know like what the outlook's gonna be for a lot of these chains. So I don't know. I actually think, yeah, sorry.
I think what's going to determine what chain survives is going to be how they partner up over this coming recession with traditional industries, and like what they're able to do from there. It's if Solana doesn't, like, take Solana or Ethereum or any of these guys, if they don't make active steps to integrate with society, take the DeFi world and bring it to the real world, if they don't take those steps, it's kind of going to flounder for me. But if they start taking those steps, you start seeing the business development happening where, like, I mean, if JP Morgan Chase does everything on Polygon, for example, okay, I mean, that's huge. That Polygon has value, right? There you go. I can tell you that JP Morgan has tokenized the treasury market, and they're making arbitrage plays on that when they're trading treasuries. I don't know if that's like big news, but like a lot of these companies, they want to jump into it because they do see the efficiencies, but it's whether or not these blockchain companies actually go out and create those partnerships, create the modules that are needed. And because a lot of companies, take the insurance industry, like the big problem with insurance companies right now is like, how do you deal with variable data, right? And this is where the blockchain helps with that. Is variable data is defined as a good example is, let's say you're married to someone and you have a health insurance plan through your company. Technically, that person's on your health insurance plan, right? But what happens if you're starting to go through a divorce? Okay, that's variable data that isn't really updated in real time. Currently, how it's dealt with is it depends on the insurance company. Some insurance companies will honor the fact that you were married, whereas other insurance companies say, no, you're off on your own. I'm sorry, you can't use the insurance anymore. And so where like insurance companies are looking at this is, well, we can use the blockchain to speed up the processing times on variable data so we have finality. Because we can have the user update it right then and there, and it's updated across our system. But insurance companies have a lot of disagreement between each other on how to really solve that problem. So they're much more willing to jump on a platform that has the policy in place, and they'll just accept whatever the policy is. So I think, as these blockchains build out, to be creative instead of creating like a custom solution for each and tailoring things, just make a good idea and then bring them on board and say, hey, this is what we do for you. And that's really going to move the industry forward from there.
Once that solution comes out, gig along for myself. I feel like I'm like saying too much, like not financial advice. But yeah, that sounds super interesting.
Yeah.
That would be like, yeah, definitely something that propels the chain. But like at the same time, would that be like a chain that I use as like a normal DeFi user? You know what I mean? Like maybe that's like too niche. Like that's maybe too much of a blanket statement because it's pretty niche.
Well, not to give out too much info that's about to come out in the next couple of months, but remember when we were talking about how, I mean, we talked about this a couple of podcasts back, that, I think the future is the individual is not going to know it's on the blockchain, right? It's just going to be a sleek interface. You're just going to access it. You'll have no idea. But the back end work is all blockchain stuff. And so, like, for a problem like this, okay, it's that the user interface, it's going to feel like you are going to feel like you're on your app, just updating information because you're being spiteful about your ex right now, right? But on the back end, everything will have been done on the blockchain, and it's just updated in real time all the way across the board. And so the user won't know. They're going to feel like it's just normal, seamless app work, but it's the back end processes that are ultimately affected. And I can tell you there's one particular company that is creating this type of wallet, right? And and they're going about it in the right way too.
Should we wrap up here?
Yeah, that works. Yeah, a lot of stuff
Okay.
to do.
Thanks
Cool.
everyone for tuning in. Appreciate, BlkSwan, Mitch, Chads. Thanks everyone.